My name is Henry Wilson. I serve as an economist for Mercaris, and we provide market data for sustainable agriculture. So like you said, I'm going to get a little bit into what the commodity outlook has been for the last year and kind of what it looks like going forward. With that, I'll kind of at first dive into some organic livestock feed demand and kind of what that is looking like. And then I'll dive into the specific commodities. So looking at the organic crop supply and demand for organic corn, organic soybeans, and organic wheat. And I'll be kind of looking at, what that supply and demand is shaping up here at the end of the year, and then also what those market implications are going to be and what it looks like going forward into 2023 and 24. And again, feel free to ask questions as we go along, and I'll have some time at the end too to ask some more questions. Without further ado, I'm going to dive into our organic livestock feed demand. Overall, organic feed demand has not really seen a lot of growth over the last year or so. A major limiting organic feed demand growth factor has been the continued retraction of the U.S. organic dairy industry. We estimate that at the end of this year, inventories of organic dairy cows and heifers will number around 740,000 head. And that's down about 1% year over year and declining 4% from their peak, which we saw back in 2018. So this is kind of a continuation of the organic dairy sector retracting and kind of consolidating as well, as we see that those numbers come down just a little bit. On top of that, organic broilers and turkey slaughter rates have diverged over 21-22 marketing year, with organic broiler slaughter gaining 1% year over year and organic turkey slaughter declining 7%. We expect that organic turkey slaughter will continue to decline another 2% over 22-23 as the marketing year began with some reduced inventories, as well as fewer certified organic farms that are producing turkeys. Organic broiler slaughter is expected to increase by 1% over the next year into 2022-2023 marketing year, as declining feed costs are improving profitability. Obviously, we know that the feed costs have been extremely high, which is part of why we've seen some of this retraction, or at least not any ability to grow. But as these feed costs continue to go down, we expect the poultry to be able to kind of gain some footing and increase their production a little bit as we go forward. At the end of this year, organic cage-free egg layers are expected to be about 1% higher, as inventory growth has really slowed substantially over 2022 for kind of those same reasons. But we project that inventories will expand by another 1% over 2023. However, as with the organic broiler and turkey production, this outlook could be reduced by a weakening U.S. economy over the next year. As we are facing lots of inflation and just the economy in general, lots of these, organic goods are still looked at as luxury goods. So as we face the inflation, it's possible that some demand for, organic poultry, organic eggs, so on, could see some weakening as we go forward. But time will tell. So overall, for organic livestock and feed demand, the total demand has been mostly flat over the last year and going into the 2022-23 marketing year and forward. Again, a lot of different factors going into this, some of it being the feed prices as well as domestic demand. But overall, we're seeing that this demand for these organic commodities for the feed sector has been fairly stagnant. So with that, I'm going to kind of dive into our specific commodities now, and I'm going to start with organic corn. So looking at the U.S. organic corn supply outlook, first off, the production of U.S. organic corn is expected to decline about 6% over 2022. And this is following a combined reduction in both yields and harvested area. Yields are expected to drop about 5% from last year due to elevated input costs and some less favorable growing conditions. As far as the harvested area, that's expected to decline about 1%. And this is because of some challenging planting conditions at the beginning of the year, as well as acreage competition due to the record high organic soybean prices during planting. We've obviously seen a lot of acres being turned to organic soybeans, so that's acres that aren't getting focused on organic corn. with that, though, obviously, harvest area is still only dropping 1% year over year, even with all of those added soybean acres. So overall, not a large drop, but still coming down from the previous year. So on top of this decreased corn production that we're looking at, we also are looking at some decrease in imports going forward. Looking into the 2022-23 marketing year, organic cracked corn imports are expected to decline by 50%. As production and logistic challenges are facing the Black Sea region, which is limiting Turkey's ability to access organic whole corn for cracked corn production, because really our big exporter to us of organic cracked corn is Turkey. And they don't really grow a lot of their own corn. They're sourcing it from elsewhere in the Black Sea, they're processing it, and then they're sending the cracked corn. So as we just have these issues in the Black Sea with the war in Ukraine and just other logistical problems, it's likely that this number is going to drop over the coming year, down roughly 50% over the next year. And then if we look at organic whole corn imports, we're also expecting those to fall about 19%, down to 5.5 million bushels over the 22-23 marketing year. I'll get into that a little more in a moment. But with all that said, assuming the markets remain within these expectations, we anticipate that organic corn will expand 10% over 2023 as the acres rebound from 2 consecutive years of expanding organic soybean production. Obviously, we've seen a lot of acres be turned to soybeans, and even people growing soybeans in back-to-back years to capitalize on these high soybean prices. But now we're both reaching a point where these prices are coming down and there isn't as much incentive to grow soybeans, as well as just with crop rotations, people are having to turn back to corn. So we expect in 2023, after this decreased production, to see some more attention put into the corn and to see that those harvested areas expand to 10%. And assuming that the yields reach trend levels, we're estimating that 2023 organic corn production could reach 52.8 million bushels, and that's gaining 13% year over year. So, over this year, we've seen some pretty significant reduction, but we expect that to bounce back going forward as those acres grow back, and hopefully yields improve as well if growing conditions can continue to improve. So with that, we'll look at the imports a little bit closer as well. Obviously, the US production growth kind of came to a halt over 2022. And we're also expecting US organic whole corn imports to decline despite this lower US production. Obviously, this is for a couple different reasons. A big one is that organic cracked corn imports that we're expecting to reach a 5-year low, mostly because of those complications with Turkey and the Black Sea region. As far as organic whole corn imports, we're also expecting those to drop, mostly because of imports from Argentina and Canada. Argentina's shipments to the US are expected to drop 40% year over year in the 2022-23 marketing year. A big part of that is just due to drought that Argentina is facing themselves. And we're also expecting Canada imports to decline 20% year over year. So with that being said, what does that really mean as far as the big picture of this reduction of imports? Well, despite both imports and production declining over 2022 and 23, the bullish price support is expected to be pretty limited because we have large carryover stocks from 2021-22. We estimate that the ending stocks from that year are around 4.5 million bushels. And so despite this, drop in production and drop in imports, we have enough carryover stock to kind of still meet that demand that is there, that should hold prices from coming up too much despite this, decreased production and imports. However, any significant deviation in imports from what we're currently expecting could quickly result in some price volatility. But obviously we're expecting some pretty significant drops and still being able to hit that supply. So it would take some significant impacts to drop those imports enough to create that to happen, but it's always possible. However,
hey, Henry, there's a couple of questions coming on the chat, but do you have a average or a good snapshot of the corn yields average by nation? I would imagine it vary quite a bit by region, but is there kind of a number that you work with?
Are you talking for just for the US or?
Yeah, yep.
Yeah, so go back here. I was just kidding. I don't have yields on this table, but yeah, that's something we work with. It's an average. We look at different regions as well to kind of figure out what yields are going to be. I don't remember off the top of my head what our yield number was for this year, but it's something I could pull up after this as well.
Sure, sounds good. Thank you.
Yeah. Any other questions for the moment?
Yeah, I don't think so. I'll kind of keep monitoring the chat here.
Perfect. Sounds great. So yeah, looking at that, obviously we're expecting that, like I said, that supply to kind of be there for the demand over the next year, despite that reduced production. And we're kind of having the expectation that if we do see improvements in US production and trade that we're expecting after this year, we expect that US organic corn supplies could reach a record-setting 64.1 million bushels over 2023-24. With ending stocks reaching like 4.8 million bushels. And under this scenario, we could expect some significant bearish price pressure starting to develop by the fall of 2024. So, we'll be reaching this position where we start to see ourselves be long for organic corn supplies, and that price start to, come down as we, really are nearing self-sufficiency when it comes to organic corn production in the US. We're not very reliant on imports for organic corn. So as production continues to grow, we're going to expect that more and more we're going to reach this long position where we can't rely on just cutting imports to kind of balance that supply and hold prices even. So, obviously over this year, we see this big reduction in production and imports, but as we expect that to bounce back, over 2023 with increased production, we could see where we start to get in a long position and we start to face some, bearish price pressure as we go forward. But for now, we expect corn to be fairly stable over the foreseeable future, but it will kind of depend on how imports go over this next year if we can see some more volatility. So that's it for organic corn. And now I'm going to dive into some organic soybeans, which I'm sure you're all looking forward to, as organic soybeans have been quite the roller coaster over the last 18 months, 2 years. Organic soybean supply, obviously, we're looking at some record-breaking production within the US. Organic soybean harvested area is expected to reach a record-setting 322,000 harvested acres over 2022, and that's up 18% year over year from last year. Given those acres meet expectations, 2022 is going to mark the second consecutive year of double-digit growth, with area expanding by nearly 100,000 acres, or more than 40% since 2020. Now, with the production, we are expecting yields to decline 3% year over year due to some less favorable planting and growing conditions as the acres have ramped up. Obviously, when adding this many acres, we have some of these acres are happening in not the best land for them, as well as people are going back-to-back years of soybeans, and these sort of things are going to have a small hit on yields. But again, only expecting about a 3% drop in yields, even with this large ramp up in acres. So all told, this should result in a record-setting 11.9 million bushels. That's up 15% from the previous year that, again, was up significantly from the year before as well. Now, despite this record harvest and huge increase in production throughout the last 2 years, US supplies are still actually expected to drop slightly with a decrease in imports over the 2022-23 marketing year. Unlike corn, for the organic soybean market in the US, we are heavily reliant on imports. So even with this huge growth in production, so much of our supply comes from imports outside of the US that even though we have this huge production, we still are seeing that we should have a slight drop in supplies throughout this year. And feed use looks to see a slight increase in 22-23, although still lower than a couple years ago. We saw a bit of a drop because of some turn to, canola and rapeseed and other alternatives in the feed use of soybean, but we're seeing that start to come back up, especially as prices start to come down a little bit. The food use and residual look to decline as well, just as we said, the supply is decreasing. There's not as much of that supply to turn to the food market or residual and carryovers. So to get into our imports a little bit, to really look at the picture of what's happening here for imports. Why are we still not, dropping in supply even with this huge production? And so this is kind of twofold. We have, the U.S. organic whole soybean imports as well as the soybean meal imports. So if we look at organic soybean imports, we're expecting a bit of a decline over 22-23 after a really strong 21-22. We're expecting imports from Argentina up 32% over the next year, but we're expecting imports from India continue to fall down as we just continue to face those struggles with India trade with organic soybean and soybean meal, as well as imports from the Russia and Black Sea region to drop significantly down 68% over the next year. So we saw imports jump up heavily over this last year from the Black Sea region in Russia, kind of for a couple of reasons. One, we had a lot of increased imports because we were expecting a drop in imports because of the struggles with India, as well as we had these record high prices. So a lot of countries were importing soybeans to the US for, again, kind of those two reasons. We were pulling them in expectation of losing India, as well as countries had incentive to ship us soybeans because the prices were so high. But looking into the following year, if prices continue to drop, imports could kind of follow. These U.S. organic whole soybean imports that have come up, we could see drop back down following with prices as we kind of find that new price floor as we go forward. But now really the big thing here is the U.S. organic soybean meal imports, because that's what we were importing from India. And that's where we saw, fall off the table because of these trade restrictions. And as we go into the following year, we're expecting these imports to continue to drop, down 47% year over year, and obviously down very significantly from even a year ago. And as these Indian imports have kind of gone away, we've seen some increases from other countries, but it's just not enough to fill this gap that was left by losing these imports from India. We see, again, a large amount of organic soybean meal imports came from Russia and Black Sea. And we're expecting that these are going to kind of decrease going forward over the next year. Again, one, because of prices coming down, and two, just because of we are unsure of the scenario of what's going on in the Black Sea, of the logistics, their ability to get soybeans to processors, and how that's going to get over to the US. So with that, as well as, a bit of a decrease, or not large increases, at least from Canada or anywhere else in the world, we're not expecting these imports to be able to, keep up with this drop from India and see these continue to drop. So basically what that means is, as we go forward, looking at the US organic supply, we're starting to face some bearish pressure as prices continue to go down, even though our supply is down, for a couple of reasons. One, in addition to a record-setting harvest we just had, we're also estimated to have begun with record organic soybean and soybean meal carryover stocks, following a 2.1 million bushel increase in production over 2021, as well as imports of both organic soybeans and organic soybean meal remaining strong over 2021 and the beginning of 2022. So this is bringing total supplies for the marketing year to a record-setting 38.5 million bushels because of these carryover stocks. On top of that, organic soybean feed demand, declined over 21-22, following that increase in organic rapeseed and sunflower meal use, as well as what we saw that was minimal growth in just total feed demand. So with that all being said, we estimate that the ending stocks of 21-22 reached about 2.4 million bushels, where ending stocks of organic soybean meal reached around 50,000 short tons. So with both increased US production and these large carryover stocks, we're kind of looking at 2022-23 being in a bit of a long position when it comes to the US supply at the start of the marketing year. Now, this is kind of expected to result in some persistent short-term bearish market price pressure, as we've already kind of seen. We were looking at $40 bushel soybeans back during the summer, and now we're already starting to see those come down, where we're looking at under $35 a bushel, even under $30 bushel soybeans. And we're expecting that this pressure is going to continue into the beginning of 2023 as we kind of get through this long position that we think that we're in, as well as imports continue to come in. Obviously, this big flooding in of imports is supported by these high prices. And so we kind of have to find where that new price floor is, because it used to be set by India, when we had very consistent $20 a bushel soybeans, and India was sending us those soybeans. But now we're in a new market where we have these imports coming from so many different countries, and they keep coming in even as these prices drop, but eventually we'll hit a point where the price will drop far enough that these imports will slow down. So all that being said, we expect this downward price pressure for soybeans to continue into 2023 until we hit a point that these imports will slow down, which we expect to happen. Obviously, we expect organic soybean meal imports to decline 16% year over year, as well as organic whole soybean imports to decline 20% year over year in the 2022-23 marketing year. So with that being said, looking forward beyond that, though, with this bearish pressure and prices dropping into this this winter and into the spring of 2023, we're expecting that to result in a 25% reduction in organic soybean acres in 2023. If that happens, and assuming yields reach trend levels, we estimate that organic soybean production will reach around 9 million bushels over the fall of 2023, and that will be down 24% year over year. So that could likely bring some bullish support back to the organic soybean market, because we'll hit this point that imports will slow down and we'll have a large decrease in soybean production after the last two record-setting years. So that could bring some bullish support back into it, end of 2023 and looking into 2024.
Henry, do you have any analysis of what percentage of the soybean use in the U.S. is domestic versus imported? Is that something you guys follow?
That's a great question. That is something that I could get. It's not something I have at the top of my head, but it's pretty significant. I'm trying to. It's something around. I want to say 20%, but I might be. Don't hold me to that. That's something I'll have to double check. But yeah, it's a pretty significant amount that we rely on imports when it comes to organic soybeans. Any other questions? Well, we're
the strength of the dollar. Does that have any impact on this kind of import scenario as well? Is that kind of another factor there?
Sorry, can you repeat that?
Oh, sorry. Yeah. So any impact of the strength of the currency on import situation or not, or?
I'm sure that could play into it slightly. I don't see it having a huge impact. It will be a playing factor in just the price difference of, where this price is, that it hits an end, that it could give it some support, that those prices, that the organic soybean prices can drop even more and continue the imports. But I think even with that, we're still going to hit a point that organic soybean prices are going to drop to a point that these imports will slow down, regardless of, the strength of the US dollar.
Gotcha. Thank you.
Yeah. Cool. Well, if no other questions at the time being, I'll dive into some organic wheat. So organic wheat is not quite as crazy as organic soybeans, a lot more steady of a market. But looking at, what we've looked at over the last year and going forward, this year organic wheat harvest area is expected to drop about 1% over 2021. Coming around 661,000 acres. Now, this reduction was largely driven by a 5% drop in harvested acres across the U.S. high plains, with persistent drought conditions that have significantly impacted production in that area. In Montana alone, where a lot of organic wheat is grown, the organic wheat harvested area is expected to decline 6% year over year, and that's including an 8% reduction in the number of certified organic operations that are producing the crop in 2022, as we've seen just this bad drought and rough growing conditions kind of push some players out of the organic wheat market in that area. But despite the reduction in total harvested area, organic wheat production is expected to reach 20.2 million bushels, which is up 4% year over year. Now, the bulk of this increase is expected to result from the increased organic spring wheat production following some significantly improved yields. Where organic spring wheat is grown has kind of gotten better when it comes to those drought conditions. So we're seeing some improved yields in those areas that has helped this production kind of bounce back in 2022-23 compared to the previous year, despite this reduction in acres. We estimate that organic spring wheat production will reach around 6.4 million bushels. That's up 42% year over year, but still below 2020 and 21 production levels, as you know, we're slowly climbing back out of a couple of rough years. Organic winter wheat production is estimated to have reached 13.1 million bushels. This is down 8% year over year as 2022 winter drought conditions cut yields across Wyoming, Colorado, Kansas, Nebraska, and Texas. That really has impacted the production for that organic winter wheat. Organic durum wheat production is estimated at around 710,000 bushels, and that's mostly even year over year, as some declining harvested area there as well has been offset by improved yields in both Montana and California. So again, a little of the same thing where we're losing some total acres, but we're seeing some improvement of yields, and that's helping production not drop too far. And as we look forward into 2023-24, we expect, you know, a bit of a bounce back in total acres, as well as some continued improved yields and growing this total organic wheat production, just as these drought conditions slowly start to get better, and we see, you know, the ability to grow this organic wheat improve quite a bit as we, you know, get out of this drought. So what that looks like for the U.S. organic wheat use, we're expecting that animal feed demand is going to increase about 1% over the 22-23 marketing year, as we have some elevated wheat protein levels that make it desirable, as well as some, you know, price competitive organic corn, and we have minimal total organic feed demand growth that's kind of limiting that use, keeping it only at 1%. But you know, that's what we kind of expect to see over the next year. The organic wheat food use and residual is expected to reach 11.7 million bushels, and that's up 12% year over year. You know, well, organic wheat supplies for food use and residual are expected to increase, you know, for the first time since 2019-20. We're not expecting this increase in supply to have much of an impact on prices. You know, you see this large supply and you think it could push prices down, but we don't really expect to see that happen, because even though there's an increase, it's still just kind of a recovering from a couple of years of struggling production in the US. So what this means for US organic wheat prices, we're expected them to remain elevated for a couple reasons, mostly due to some mixed organic wheat quality, as well as just generally elevated organic wheat protein levels. Because we've had good protein levels, that's going to keep the price up for this organic wheat. As well as, you know, we had some questionable organic winter wheat planting across the high plains still, that there's still enough questions in the production there that's holding those prices higher. So overall, prices are moving higher for hard red spring wheat, despite some improvement in production. And hard red winter wheat also continues to climb a little bit in price. But we have started to see the organic feed wheat prices begin to drop a little bit as we've gone through the end of 2022. So overall, what are the real implications here? I just talked a lot about numbers and up and down and imports, but what does it really mean for, you know, organic corn, organic soybeans, organic wheat, looking at the end of this year and going forward into 2023 and, you know, 2024? So really what we're seeing is these markets starting to kind of hit some turning points at the end of 2022. You know, as we already said, you know, it's been a bit of a whipsaw the last, you know, 18 months. It's been kind of a lot happening, especially, you know, in the soybean market, but really in corn as well, and a little bit in wheat. And we're kind of seeing that end at 2022. We're starting to see things turn. First with soybeans, the organic soybean market is starting to look bearish as prices are declining over harvest. Over the last couple of months, we've started to see these prices drop, and we expect that to, continue into the spring of 2023 and see those prices continue to come down. But as we look forward to 2024 and beyond, we're going to see production decrease, and as prices drop, imports will most likely drop. And so we could hit a point that we'll kind of level out, find our floor, and then be able to, have some, pressure push those prices back up as the supply decreases. Organic corn looking forward looks pretty steady. We have good carryover stocks, and even with these reduced production that we've seen, we think that it's going to be able to hold fairly steady over the next year, and then into 2023, we'll see that increase in U.S. production as we kind of rotate away from this large amount of soybeans being grown and plant more organic corn. So most likely prices will hold strong until we, reach into 2023 and 24, where we could start to see ourselves get into a long position and see some bearish pressure on prices as we go there. But again, that also remains to see on what imports do. And if those begin to be more volatile, we could see organic corn prices be less steady. But for now, they look like they should be fairly solid. Organic wheat prices remain bullish despite some improved production. We're continuing to increase that productivity for organic wheat, but we're still seeing some increase in prices as we really need to just gain more, getting out of these drought conditions to increase that wheat production a little more. So overall, supplies remain, a large point of risk for 22-23. We began with a large carryover stocks. It's kind of adding to that, bearish price pressure for soybeans. And then for corn, declining imports and reduced harvest are keeping supplies and prices pretty balanced, but it's always a tightrope of where those supplies and demand are for corn. Increasing imports and acreage gains could push this corn bearish by the fall of 2023 and into 2024, as we talked about. And then for wheat, really, it's this drought relief across the U.S. High Plains is super critical for that improved, wheat supply outlook, as we've started to see, but we kind of need it to continue to really get out of what has been this tough drought for organic wheat producers. And so, that's really what we're looking at for these, three main markets that we're looking at in the organic feed sector. With that being said, that kind of covers what I wanted to talk about here as far as giving an overview of these couple of different organic markets. I'd love to open up for more questions when it comes to, any of these markets or imports or something else that you think I might be able to, give some insight into. Welcome some questions now.
Yeah, thank you very much, Henry. I really appreciate your knowledge and insight and taking the time to share this with us today. Going back to the wheat question, is there any data specificity with winter wheat between hard red and soft red? Is there kind of market indicators there that you're aware of, or is that kind of all lumped together in one clump? Yeah, it's kind of all lumped together in one clump. The organic wheat sector just isn't very, very large yet. So that's one of the things that is actually a big focus of Mercaris right now, is we're focusing on, the organic wheat prices and kind of growing what we can have to differentiate these different kinds of wheat, because they are just much smaller markets. And so for, if you're interested in more, especially like the food sector, we'd love to talk to anyone about where we're kind of going with that. But for now, yeah, it's kind of all lumped into one, as these are just more niche markets than, the organic corn and soybeans. Gotcha. Yeah, and kind of zooming out a little bit, has there, talk a minute about Mercaris and what you folks do kind of large scale, to give a little perspective there. Yeah, absolutely. So, Mercaris, we do a lot of things. First and foremost, we're a price reporting agency. We're here to provide quality prices for, our focuses are organic corn, organic soybeans, and organic wheat. But we also are growing in other markets as well. As I said, food grade wheat is a big area of expansion right now, as well as food grade in general. We're looking to, improve our market data for food grade corn, soybeans, but, we provide more than just price as well. We provide import reports, as well as we provide acreage reports as well, on a bi-yearly basis or biannual basis.
as well as we have some other things we do as far as just, trying to connect producers to processors. And we even have a trading platform in Mercaris as well, where we, will provide an area for people to trade commodities. So yeah, we do a wide range of things, but our main focus is, providing quality market data to, the organic sector.
Gotcha. Yeah, and I know, and just from our own perspective, we use your reports pretty frequently, and it's, I think before Mercaris was really on the scene, it was hard to get quality market data. I mean, the USDA reports on some of this information, but it's kind of sporadic and few and far between. So it's been really helpful, I think, for a lot of folks to have reliable and historic data to rely upon. If you don't mind me asking, how do you folks kind of collect your data? Where are you going for this information? If you're allowed to share, that is.
Yeah, no, absolutely. So, we partner with processors, with brokers, with producers, and it's we collect contracts from all of these different people within the market, and we use that to aggregate these prices and look regionally as well to be able to provide these prices back out. So it's something that we have a lot of data partners where we're getting data from them as far as what they're contracting and as what they're selling, buying, and that sort of thing, and we in turn provide them data back as well. So that's we have a large network of partners that we work with. We also work with certifiers as well to get certifier data for our acreage and things like that. So we rely on a lot of different partners that we work with to collect this data.
Awesome. Is going back to soybeans, I'm going to kind of be jumping around here based on the chat conversation, but is there a historical trigger price on organic soybeans that it has kind of like been a threshold where above that, imports are more attractive and below that they're not, or is it not that simple?
That's a great question, because really looking forward, that's really what the question is where is that trigger point? Because for years and years, organic soybean prices were so steady because it was right around that $19-20 a bushel, and that was kind of the trigger point. It was around there. That's where India was going to be sending us soybeans. And so now the whole sector has gone into flux where, one, our imports are coming from so many different places where, India used to make up well over 50% of the share of what we imported for soybeans. No country makes up more than 20% now. And so we're really kind of waiting to see where that floor is going to be, what that trigger point is. We haven't hit it yet. Obviously we're sitting somewhere in the, averaging around low 30s for organic soybean prices. So that's the question. Is it going to be at $25, $27, $29? When we hit that point, that is kind of that trigger point for those imports. So, I can give you a guess, but it's just going to be a guess at this point. Kind of got to wait and see.
Yeah, and similar, I think I'll provide a little context to this. The question is primarily, what level of margin between organic and conventional prices is enough to sustain the market itself? And I mean, it seems to me like getting quality data on, we know how many organic farmers there are in the US, of course, but we don't have a good sense of following, what folks are in the pipeline in transition. And so there's kind of some holes in the data there, but do you have anything to add on that particular point about like, where is that magic price spread that makes that, those acreage numbers grow?
Yeah, that's another, it's a difficult question just because, obviously we've seen such extreme high organic soybean prices. And, when you're just looking at it blanketly, you would see like, okay, it would make sense to make the jump to organic because these prices are huge. But really, when you're talking about making that jump to organic, you're talking about a whole farm operating, change. You're not just choosing, hey, yeah, prices are high, I want to grow organic now. You're talking about looking into the long term because, you have to transition acres. It's going to be a long-term process where you might even be taking losses. And so if you're going to be jumping into organics, you're having to make a large whole farm decision that you're doing that. So most of where we're seeing, these acres grow is not because people are really making the jump from conventional to organic as much. It's people that are already growing organic increasing their acres. That's where a large amount of it comes from. So, it's really hard to say where that price is, where, we have this level over conventional that, yeah, people are going to make the jump and grow organic soybeans now because, it's just not a simple, I'm going to grow organic soybeans this year. They have to go through the transition. It's making whole farm changes. So obviously these huge prices, I think, have probably brought players into the market. But I don't think there's really a magic place where people make that jump because, it is a whole farm decision that they have to make.
Yeah, very good point. And it kind of reinforces too that, with a whole new set of management considerations, machinery, marketing, there's no easy button in organic. So, there's a higher barrier to entry, and we definitely see, folks that organic production may not align with their system and they drop out because it's just not, they're tired of fighting weeds, and it doesn't, it's not inherent in their production system. So it is in that way a little more insulated. But yeah, it's still a challenge to kind of get a handle on, it seems.
Absolutely.
Great. Well, really appreciate it, Henry. Thanks so much. This has been great information.